What is the ideal percentage for a stop-loss order in options? Have you ever wondered what the best percentage is for placing a stop-loss order in options trading? It's a question that many traders ask as they look to manage their risk effectively. The ideal percentage for a stop-loss order can vary widely based on several factors, including your risk tolerance, the volatility of the market, and your specific trading strategy. Generally, you will find that stop-loss orders in options trading are set between 10% to 30% below the entry price for long option positions. This range allows traders to limit their losses while still giving the trade some room to fluctuate. For instance, if you buy an option at $100 and set a stop-loss at 20%, your position would close if the price drops to $80. This method helps you manage risk in a way that is proportional to the size of your trade. When it comes to volatility, options are usually more volatile than stocks. This means that your stop-loss percentages might need to be wider than what you would use for stock trading. In highly volatile markets, you might want to set your stop-loss closer to the higher end of that range, around 25 to 30%, to avoid being stopped out by normal price swings. Conversely, in calmer markets, tighter stop losses around 10 to 15% can be effective. Another tool you might consider is the trailing stop-loss. This type of order adjusts dynamically as the price of the option moves favorably. For example, if you set a trailing stop-loss at 15%, it will move upward as the option price rises but will not move down. This allows you to lock in profits while still protecting against downside risk. There are also fixed stop-loss orders, which are set at a specific price level. These are often used by beginners or those with a lower risk tolerance. However, percentage stop-loss orders tend to be more adaptable, making them better suited for the volatility of options trading. Some traders also incorporate time-based stop-losses, closing positions after a certain period if the trade does not perform as expected. Others may use volatility-based stop-losses, which involve setting wider stops in volatile conditions and tighter stops in stable markets. In practical terms, since options lose value over time and can be sensitive to changes in the underlying stock price, setting stop losses too tight may lead to frequent premature exits. Many options traders find that stop-loss percentages between 15% and 25% strike a good balance between managing risk and allowing for normal price fluctuations. While there is no one-size-fits-all answer to what the ideal percentage is for a stop-loss order in options trading, you will typically see it set between 10% and 30% below the entry price. Adjusting this based on market volatility and your individual risk tolerance can help you protect your capital while still allowing for potential gains.